In this video, we're going to be going over an article from Seeking Alpha discussing Walgreens stock.
Trapped in the concept, falsely accused, was used, and misled. I'm hoping you can rest in peace.
Welcome back, homies and homettes, for another video. I know this isn't the stock analysis video. I promised that would be up on Saturday this past week. And to be completely honest, I did have a whole video planned out. I was going to go over Wayfair stock for you guys, but the problem is I did just get my second shot yesterday, the second shot of the vaccine, so I'm honestly just feeling completely drained and completely exhausted. I literally have absolutely no energy. It's really taken just about every ounce of energy in my body to stand here and film this video right now. So basically the moral of the story is we're not going to see the Wayfair stock analysis video, but to summarize it, it really wasn't anything because I did look into the company fully. Wayfair really wasn't a company I felt like I needed to buy by any means. I liked Etsy a lot better, to be perfectly honest with you. So I don't even know if you guys are going to end up seeing that Wayfair stock analysis video because I like to do those videos on stocks I find very interesting and very intriguing. And Wayfair just didn't really have anything behind its business model that made me super excited about it and super excited to talk about it in a video. But basically what I'm trying to say is those videos take a lot of energy, a lot of excitement. They do take a lot out of me and they take a lot of planning, and I just don't have the energy to do that today, to be perfectly honest. I know it's an excuse, but we should see another stock analysis video next Saturday, for real this time. But as for right now, I really don't know how long this video is going to be. I'm not sure what's going to happen here. Honestly, I don't even know if you guys are going to end up seeing this video because I am just so drained filming this right now. But hopefully you guys do get some value out of it. Hopefully you guys do end up seeing this video. If you do, please drop a like on the video. Also subscribe to the channel. Those two things would help out my channel massively. Also turn on that notification bell if you want to be notified for future uploads. So the name of this article is Walgreens, More Reasons to be Positive by Damian Robbins. Although WBA has plagued over the past few years, last quarter 3 could have established the bottom in a turnaround story for the company. Now this is a very good point, and this is very true in this summary right here before we get into the actual article. When I was buying this stock a few months back, it was just so beaten down by Wall Street and it was basically left for dead. I think it was trading at like a forward PE of 9 or something like that. And as you guys know, as I talked about in my Walgreens stock analysis video, which is the most viewed video on my channel, I thought there was a lot of short-term things going against Walgreens that made the company seem like it was going under and it was going in the wrong direction. But in reality, over the long term, I actually saw a very bullish side of this company. Near-term positives that have risen include omni-channel strength, international pharmacy recovery, vaccinations driving traffic, and debt paydown. So these are a couple of things I saw that Walgreens really had going for them when I first started looking into this company and when I really started to buy this stock. As I mentioned in my Walgreens stock analysis video, most people do live within 5 miles of a Walgreens. I think it's 80% of people live within 5 miles of a Walgreens. So it just makes sense that Walgreens would be the ones, they would be the main players giving out these vaccines for when they're available for everyone. They also started to reallocate the attention that they were putting into certain stores, and they started closing down certain stores that really weren't doing them any good. They started doing this in 2018, and obviously in the short term that did hurt their business a lot, but over the long term and over the past couple of years, it's actually really helped their business in my personal opinion. There are a few risks to be wary of with Walgreens, including an opioid lawsuit, cost management initiatives, and COVID-19 impacts and guidance. Long-term outlook remains positive with approximately 4% annual growth in revenues to $165 billion and approximately 8% growth in EPS to $6.05 by fiscal year 2024. Walgreens Boots Alliance had finally pushed to a new 52-week high last week, and shares rising 50% in under 2 weeks. Although the pharmacy has been plagued over the past 2 years, last quarter 3's mid-30s trading could have established a bottom for a turnaround story for the company. With trends within sales data and earnings regarded as mostly positive, Walgreens could be opt for a defensive-minded turnaround, looking past the execution risk for an attractive long-term dividend play. Although the recent quarter was marred a bit by EPS impacts stemming from the pandemic and the equity interest in AmerisourceBergen. However, multiple different signs within the earnings report as well as the broader trends point towards a positive outlook for the company. During the third quarter, revenues rose 5.2% on a constant currency basis to $36.3 million as adjusted net earnings per share fell 11.2% to $1.22 due to COVID-19 impacts of $290 to $325 million, a bit higher than expected. More impacts to the EPS in the near term are expected with minor dilution from the Alliance Healthcare sale to ABC as well as a weaker cough, cold, and flu season. Yet fiscal year 2021 EPS should be able to rise approximately 3% year-over-year with strengths in pharmacy. So what are the upbeat signs? Even in the face of lower foot traffic, significantly lower flu incidents, and a reduction in new-to-therapy prescriptions due to fewer doctor visits and elective procedures, all of which contributed to retail and pharmacy. So he talks about how foot traffic has been lower as of recent, but in my opinion, over the next couple of quarters, especially as this vaccine starts to become more and more widely available available and it's more of a common thing, you're going to see foot traffic soar through the roof. Now, as you see more and more people go into Walgreens to get those vaccines, you're going to see more and more people buying more stuff. You're going to see those people that are going to go to Walmart and Target. They're going to say, let's just buy this at Walgreens because we're here already and it's more convenient. On top of that, you're going to see people walking down the aisles to the pharmacy to get their vaccines, and then they're going to catch things out of the corner of their eye. They're going to decide, I want to buy that. I want to buy this. This looks like something I need. Oh yeah, I need this. You're going to see a lot more in-store purchases, and it's going to be very, very big for this company. Omni-channel strengths. Even with lower foot traffic and weak flu season, Scripps omni-channel strength shown. Comp pharmacy sales were up 5% on the back of 2.7 growth in prescriptions filled to 279.3 million. Comp retail sales ex tobacco rose 1.9% even after 11.6% growth in health and wellness. Moving forward, prescription should continue to perform well and gain some incremental market share to 21%, while discretionary spending after stimulus in a mid-reopening could aid beauty sales as the segment dragged on performance with 13.1% decline. Wholesale channel revenues rose 16.3% to 7.1 billion on a constant currency basis and could continue to grow through the remainder of full year 2021 due to strong momentum within the ABC contribution, as well as a PPE and other sales in European nations in lockdown or tightly restricted conditions. Walgreens also reworked its loyalty program into My Walgreens and logged over 400 million members to the program in just 6 weeks from its 100 million loyalty cardholders. Membership growth/transition to My Walgreens should continue at scale this year. Omni-channel customers, drive-through, pickup, in-app, and online have reached over 8 million daily, aided by Walgreens' fastest delivery times as little as 30 minutes. Leverage of loyalty members as well as Omni-channel's presence can give Walgreens a slight leg up against CVS when traffic starts to return to normal. International recovery. International retail pharmacy had some poor comp sales results, with Boots seeing some larger traffic declines in areas like high street and travel locations, train, air. However, strict lockdowns in the UK have contributed to limited traffic, and the shift to Boots.com witnessing 106% growth in a demonstration of customer engagement/loyalty. As restrictions in the UK become more flexible, traffic levels should abate, but 20% larger basket size and e-commerce strength, contributing nearly 1/4 of total retail sales in the UK, should accelerate the recovery in physical store sales. So with this, I personally see Walgreens numbers recovering much faster in the United States as opposed to overseas, and you might be wondering why that is. Well, overseas you saw a second lockdown. Obviously in the United States we didn't see a nationwide lockdown like we saw like this time last year, so that's why it's going to take longer for countries overseas to recover as opposed to the United States. Now, I still see those countries overseas recovering. I still see Walgreens stores overseas recovering. I'm just saying it's not going to be as quick as in the United States, in my personal opinion. Testing/vaccinations. Walgreens is authorized to administer COVID-19 vaccines and tests, which don't necessarily drive any revenue, but drive traffic, bringing people to stores and sites to receive the two. As such, more vaccinations over the coming months could help to normalize traffic levels to a degree, even though flu seasonality will likely adversely impact that figure, and tendency to one-stop shop could see some purchases from a percentage of customers coming to Walgreens for vaccinations. Vaccinations could also indirectly aid Walgreens through lessening the strain on the provider system, and more visits and procedures could pave the way for more prescription growth. Now, vaccines, yes, I see that driving a lot more traffic for a lot of reasons, as I mentioned in the stock analysis video pertaining to Walgreens. I'm not going to continue to go over all of them, but as for the test, as for the virus test, I really don't know if that's going to have such a big impact on their revenue per se. Obviously, if you have this virus and you're going to Walgreens to get tested, in my opinion, what I would do is, first of all, I would be pretty nervous. My anxiety would probably be pretty high, so I don't know if I'd want to go in the store even if my test was negative. If it came back negative, I think I would be so relieved and I'd be so exhausted because I'd be so stressed out about it. I would just want to go home after. Obviously, if it comes back positive, if you're doing the right thing, which hopefully if you're watching this video you are, you should not be going into that store. So that's just how I feel about it. So vaccinations, yes, absolutely. I see that driving a lot of traffic. Don't know exactly about the COVID tests. Alliance Healthcare divestment. The divestment to ABC allows Walgreens to focus on pharmacy and retail growth while still benefiting through the equity stake. Walgreens sold the business for approximately 12 times EBITDA, netting about $6 billion after cash plus the 2 million share stake. Proceeds to pay down investment-grade debt, approximately 25% reduction, are a huge plus coming out of the deal, lightening liabilities and boosting shareholder equity in higher book value. So if you guys didn't know this and you weren't aware of this, Walgreens did sell the Alliance part of their business a few months back. I'm not going to go in huge detail about that deal, but it was really helpful for Walgreens selling off that side of the business, and now their balance sheet is loaded with cash, as he mentioned in the article. Some risks. Even with the positive signals lying within earnings and macro trends, there are a few risks to be wary of with Walgreens, including an opioid lawsuit, cost management initiatives, and COVID-19 impacts and guidance. Walgreens is under fire from Arkansas, with the state pinning the company in a lawsuit as playing a role role in the opioid crisis and in violation of deceptive trade practices. While the suit is still ongoing, Walgreens has stated that it will defend itself and costs arising from this suit, and any potential settlement could be quite large and make a dent on both Walgreens' image and balance sheet. Walgreens' transitional cost management program, adopted during the pandemic to push through with cost-saving initiatives, has been working with adjusted SG&A down 12.5%. However, as Walgreens works to modernize pharmacies and elevate customer experiences, increase automation, and build out village medical clinics, additional costs could be incurred on the way, minimizing cost-saving efforts and impacting bottom-line growth by weighing on margins. COVID-19 remained a cloud over operations during the first quarter and could continue to have adverse impacts on contribution from internal pharmacy and traffic numbers through the remainder of the year. As such, revenue contribution internationally during quarters 2 and 3 could be below par, and EPS for the full year might fail to show any growth if $100 million in the pandemic impacts were registered during quarter 2. Walgreens' forecast for low single-digit growth in EPS could be at stake, thus challenging the recent rally and likely leading a slight valuation reset, as forward growth could be reevaluated. Okay, so we got a few things going on here. So first off, the concerns he brings up in this article, they don't really concern me that much as an investor. The opioid crisis. I mean, I feel like you can make that case with any pharmacy at all. And even if they do have to pay up for this settlement, their balance sheet is cash loaded, so I don't see it being that big of an issue, to be perfectly honest. As for a dent in their reputation, I mean, guys, you see stuff like this with Apple. You see lawsuits with Apple all the time. They just price it in, to be perfectly honest. I don't see Walgreens' reputation being ruined, but that's just my personal opinion. As for the transitional cost management program, that really doesn't concern me either. I just look at this as Walgreens simply adapting. And as for the last point he makes, I really don't see that as super relevant because he doesn't take into consideration that, in my opinion, I don't know if this virus is going to go away per se. I honestly could see us looking back 5 years and this is just something like the flu. It's just something we get shots for every year. I don't know if you're going to be completely able to eradicate, I guess for lack of a better term, this virus at the end of the day. So it's going to be interesting to see what happens, but he doesn't even take that into consideration in this article. Especially with new variants and strains being out there now, I honestly wouldn't be surprised if this virus never actually truly goes away. And like I just said, it's something we just get shots for every year. Long-term outlook and valuation. On a long-term note, Walgreens' runaway amid strategic goals and objectives remains positive. With the pharmacy modernization efforts, village medical build-out, and international recovery and easing of pandemic impacts, and investments all able to aid the growth picture. With these factors, Walgreens could grow revenues by 4% annually to $163 billion by fiscal year 2024, driving EPS higher by 8% annually to $6.05, assuming fiscal year 2021, $145 billion revenues, $4.80 EPS. With EPS rising at that degree, Walgreens could grow its dividend to $2.10 to $2.15 at that time, unless it elects to grow dividends at a smaller degree to $2.05 to focus on its strategic goals. Walgreens has faced some deep multiple contractions, similar to CVS, with both trading below 0.4 times sales, although Walgreens had garnered a higher multiple prior to the pandemic. On a forward PE basis, Walgreens trades a bit higher than CVS at 11.2 times and about 9 times fiscal year earnings. Compared to 7.2 times fiscal year earnings for CVS, Walgreens makes up for the multiple difference with a higher dividend yield. So people think, and people have asked me this before, I think people think that I'm against CVS, and honestly, I also see CVS benefiting from this as well. I don't think Walgreens is going to put CVS out of business by any means. That doesn't even make sense. But for how much I was buying the company for at the time I was buying them, I just thought Walgreens was a better deal at the end of the day. However, with Walgreens' historical multiple profile, multiple expansions to 0.5 times to 0.6 times revenues could be possible, paving the way for $80 billion to $95 billion valuation, or approximately 70 to 100% upside potential. This does hinge on execution, as EPS growth and revenue targets would need to be hit with minimal impacts over the coming 4 to 6 quarters. If Walgreens fails to hit these near-term growth rates in a recovery, it could find upside limited to 0.4 times revenues due to overarching execution weaknesses in the modernization transition story. Me personally, I think the next 2 to 3 quarters for Walgreens are a lot more important than the next 4 to 6. I mean, you can make the argument, especially if you're being really short-term minded, that every single quarter is super important, but I just think these next 2 to 3 quarters are very important for Walgreens to make sure that foot traffic is coming back, to make sure that revenue is going back up, to make sure you're checking in on the EPS. All those things I feel like are super important for Walgreens over the next 2 to 3 quarters. I mean, obviously, like I just said, 4 to 6 quarters, every quarter can be deemed essentially important, but 2 to 3 quarters, those are the next 2 to 3 quarters I personally think are super important for this company. Walgreens is an interesting play, as the pharmacy cohort has been underloved for the past 5 to 6 years, with both Walgreens and CVS facing some deep multiple contraction and valuation crunches even amid solid solid revenue growth. However, Walgreens has shown some signs that it can emerge from the pandemic in better shape, using proceeds from the Alliance Healthcare divestment to pay down a quarter of debt with monetization strategies in the works. While the remainder of fiscal year 2021 could see very muted growth in EPS due to continued pandemic impacts, omni-channel strength, vaccinations driving traffic, and international recovery are some near-term positives for the pharmacy. Long-term outlook with low single-digit growth in revenues and high single-digit growth in EPS through fiscal year 2024 can aid multiple expansion, which could unlock significant upside in Walgreens, assuming that the company is not marred by execution weakness in the near term through fiscal year 2022. As for the article itself, I don't think it was bad, but I think he could have added a lot more to it, to be honest with you. He could have talked about the CEO, her new role in the company, how she's going to affect the company, what she wants to do with the company, and how that can affect the company over the long term. I feel like he could have talked a little bit more about the vaccines and how Walgreens being a main player in it can definitely affect the foot traffic and affect the company's revenues. As I mentioned before earlier in the video, 80% of people live within 5 miles of a Walgreens, and I really would have liked to see him drive home that point a little bit more. I also would have liked him to see put a little more time into describing how Walgreens is reallocating both their time and their revenues and money just to make sure the stores that they think are the most essential are getting the most attention. And lastly, his risks I really didn't deem as super relevant. Obviously they are risks, but I think he was really stuck on them, and I feel like those can be a little bit overlooked. I don't want to say completely overlooked, but I think he put way too much emphasis on them in this article because they really don't concern me as an investor, to be perfectly honest. But hey, you know what? That's just me. That's just my opinion. I think Walgreens is going to go to, $80, $90 over the next couple of years, but we're just going to have to wait and see what happens. Anyway, guys, I'm saying that's going to be it for this video. Thank you so much for watching. I really appreciate it. I really hope you guys got some value out of it. This is not what I had planned, not the stock analysis video I had planned for this weekend, but hey, we're going to be back to those next week. I promise. I'm already doing my research. I'm really going to get that stock analysis video out next week. So if you do get some value out of this, please drop a like on the video. Consider subscribing. Turn on that notification bell so you don't miss any future uploads. Let me know down in the comments what you think of this article and what you think of Walgreens. I'd love to hear from you guys in the comments. I'll see you guys in the next video when hopefully I have a little bit more energy. Roll the outro.